Required minimum distributions, or RMDs, can be a hidden tax trap for retirees. You've worked hard, you saved diligently, and now the IRS is forcing you to take income from your retirement accounts, even if you don't need it. And here's the problem. Every dollar you withdraw increases your taxable income, which could push you into a higher tax bracket, increase your Medicare premiums, or even trigger unnecessary taxes on your Social Security benefits. So, what can you do about this? In this video, I'll walk you through 4 smart strategies to handle an RMD that you don't need, so you can minimize taxes, protect your wealth, and improve your financial future. If you're new here, my name is Mark Wisneski, and I'm the president of Southern Incomes. I help business owners, professionals, and retirees maximize their wealth and minimize taxes so that they can keep more of what they've earned. A question I get all the time is, what should I do with my RMD if I don't need the money? If you don't plan for this properly, you could end up paying far more in taxes than necessary and even lose out on valuable wealth building opportunities. So today, I'm going to break down 4 tax-efficient ways to handle an RMD that you don't need. Let's get started. Strategy number 1, use RMDs to fund a Roth conversion. The first and most powerful strategy to deal with an excess RMD is using it to pay taxes on a Roth conversion. How it works. The IRS doesn't allow you to directly convert an RMD to a Roth IRA. But you can use the RMD money to pay the taxes on a separate Roth conversion. This allows you to reduce future RMDs by moving money out of a tax-deferred account and into a tax-free Roth IRA. Why this works. Reduces future RMDs by shrinking pre-tax retirement accounts. Eliminates taxes on future growth because Roth IRAs grow tax-free. Passes down tax-free wealth, ensuring heirs inherit a Roth IRA without income taxes. For example, let's say Michael is 73 years old and has a $40,000 RMD this year. He doesn't need the money and he wants to reduce future taxes. Here's what he does. He takes the $40,000 RMD and pays taxes on an additional $50,000 Roth conversion. By doing this, he moves more money into a Roth IRA, which will never be subject to RMDs again. Over time, this strategy reduces his taxable income and ensures more of his money grows tax-free. If you don't need your RMD, don't just take it out and spend it. Use it strategically to reduce future taxes. Strategy number 2, make a qualified charitable distribution, or QCD. If you're charitably inclined, you can donate your RMD directly to a qualified charity and avoid paying taxes on it entirely. How it works. Instead of withdrawing your RMD and paying taxes, you send it directly to a qualified 501c3 charity as a qualified charitable distribution, QCD. The amount does not count as taxable income, which can help keep you in a lower Medicare premium bracket, reduce Social Security taxes, and keep you in an overall lower tax bracket. Key rules for QCDs in 2025. You must be 70 and a half or older to qualify. You can donate up to $105,000 per year per the new IRS limit for 2025. The money must transfer directly from your IRA to the charity. You cannot withdraw it first. For example, Sarah is 74 years old and has a $18,000 RMD this year. She doesn't need the money and she doesn't want to pay any extra taxes. Instead, she directs the full $18,000 to her favorite charity through the QCD. The result, Sarah avoids paying taxes on the RMD. Her taxable income stays lower, saving her thousands in Medicare premiums. Her favorite charity gets a full $18,000 contribution. If you already donate to a charity, a QCD is the most tax-efficient way to give while reducing your tax burden. Strategy number 3, reinvest into a taxable investment account. If you don't need your RMD for living expenses, another option is to reinvest it into a taxable brokerage account, but do it strategically. How it works: take the after-tax RMD and invest it into a low-cost, tax-efficient in index fund or dividend-paying stocks. Keep it long-term so it benefits from capital gains tax rates, which are lower than ordinary income tax rates. Why this works? It allows continued investment growth instead of just spending the RMD. If structured correctly, the gains may be taxed at 0% or 15% instead of the higher income tax rates. And when passed down, your heirs get a step up in basis, eliminating capital gains taxes for them. For example, John takes his $30,000 RMD. He pays $6,000 in taxes, and he invests the remaining $24,000 into a diversified ETF portfolio. By the time he passes it on to his kids, the portfolio is now worth $100,000. But thanks to the step up in basis rule, his kids don't pay capital gains taxes on the appreciation. Instead of letting your RMDs sit in a low interest bank account, put it to work in a tax efficient investment portfolio. Strategy 4, spend it intentionally on your retirement lifestyle. For some retirees, RMDs are a burden because they've been in a saving mindset for decades, almost all their life. But here's the thing, you worked hard for this money, so you should enjoy it. Smart ways to use your RMD. Take a dream vacation with your family. Fund a grandchild's education by contributing to a 529 plan. Upgrade your home or your car to improve your lifestyle. Invest in your health by considering medical procedures, fitness, or even long-term care insurance. If you're already financially secure, using your RMD to create meaningful experiences can be one of the best investments you'll ever make. Don't be afraid to spend your RMD in ways that improve your quality of life. Let's recap the 4 best ways to handle an RMD that you don't need. Number 1, use it to pay taxes on a Roth conversion to reduce future RMDs and build tax-free wealth. 2, make a qualified charitable distribution, QCD, to donate tax-free to a charity and lower your taxable income. 3, reinvest it into a taxable account using tax-efficient investments and take advantage of that step up in basis. 4, spend it intentionally on experiences or investments that enhance your retirement lifestyle. Want a custom plan to minimize RMD taxes and maximize your retirement income? Book a call with me today and let's create a strategy that works for you. I'll see you in the next one.